Whenever you're ready.
Hey everyone, Derek Goldensmith here, senior trader over at T3 Trading Group, coming at you with your pro trading tip. Today, we're going to be talking about figuring out what stock you should trade. For myself, it's kind of a multifaceted approach here. The first question that I'm asking myself when in the morning, when I'm trying to figure out what I should trade, is what's in play. Is the market in play today, potentially, or not? Certain days I come in and I begin my research. My research process, by the way, is a top-down approach. So everything I do starts from the big picture, it works its way down to the small picture. People who have participated in my morning meetings in the Pro Desk virtual trading floor, they see me do this day after day. So I'm always starting with the top-down approach of the market, the S&P, the NASDAQ, and the Russell 2000 in particular. I'm looking at the big picture daily technicals, and I'm looking at how the market is set to gap, at least as of pre-market. And I'm also seeing if there's any big picture news that could affect the entire market that's coming into play that day. Then I'm making a decision. Do I think, based on this pre-market research, based on the answers to these questions, is the market itself going to be in play or not? If the market's going to be in play, I can trade almost anything. I can trade the SPYs, the Qs, the IWM, any of the leveraged ETF products that also focus on those indices, and I can also trade any of the stocks that have a very high correlation to any of those indices, like an Apple or a Microsoft or something like that as an example. So if the whole market's going to be in play, then I have a very large universe of stocks I could potentially focus on, the market itself or anything that's going to be correlated to it. But on a majority of days, when I'm doing my morning research, I'm still starting with the top-down approach, coming up with a big picture game plan based on the market. But the market itself oftentimes is not going to be in play. And if it's not in play, then I don't want to be focused on the market so much. It might have a tighter range that day, lesser volume than typical, less direction to the actual trading of the market itself. Some days you just wake up and you're looking at the market and it almost seems like a coin flip on where it's opening, on whether it's higher or lower. And if that's the case, if it's a coin flip, I don't want to be involved. On those days in particular, I really want to be focusing on stocks that are in play. Now, there's a number of ways in which a stock can be in play. First and foremost is news. If that company had news, it got an upgrade or a downgrade or had an earnings report that day, I know that stock is going to have higher volume than it typically does, higher volatility than it typically does, a range that's wider than it typically does, and a correlation to the market that is less than it typically does, which means that I could focus on this as something that's going to be trading independent to the market, and it can give me opportunity. You also need to be paying attention to certain things like price and liquidity to make sure that makes sense for you. As a very general rule, if a stock is trading less than 100 to 200,000 shares in a typical day, I really have no interest in trading it. But it's also going to depend a little bit on the pricing of the stock, right? So liquidity, how thick, how thin is the stock? How wide is the spread going to be? Another really general rule is if I'm looking historically at a chart and a 5-minute chart typically has gaps in it because it might go a full 5 minutes without trading, it's usually not going to be a stock that I have any interest in. My personal sweet spot, I love trading stocks that are priced between $10 and $100 that have large ranges, so they move a lot, but they're also going to be pretty liquid. And that's because I can take a large tier size in those. And for me, having more shares means I can add more complexity to my game plan, which means I can potentially be more profitable in that trade than I would be otherwise. So I'm paying attention to liquidity, spreads, and I'm paying attention to price when I'm making a decision. I don't love trading the really expensive stocks day in, day out. I'm not a huge fan of even trading Amazon or Google day in, day out just because they're so expensive and their spreads can be so large that I feel like it puts me at a little bit more of a disadvantage than focusing on a stock that's maybe $60, $70 and is a lot more liquid, especially if that stock is in play. So these are all of the considerations that I'm going through on a day-to-day basis. To recap, one, starting with an analysis of the market. Is the market in play today or not? If it is, there's a lot that I can focus on. Two, if the market's not in play, what individual stocks had that news that's going to increase the volume, the volatility, and the range and give me an advantage when the market itself is otherwise out of play. If you like this lesson, give me a like, give me a subscribe, and check out those links in the description. I'll see everybody next time.